Ladies and gentlemen, unfortunately, over the last 12 hours, we've seen two quite bad things occur. Things that weren't likely to occur, in my opinion, at all, really. We look at the 4-hourly chart on Bitcoin, and we'll zoom in and show you here. We had a descending channel formation, a very strong, a very powerful descending channel formation, actually. It does surprise me a little bit that this broke to the downside. And as you can see, it had 3 retests to the downside, 4 right here as well, and 4 separate retests to the upside. This is a very, very strong descending channel formation, pressing up against major support through things like the bull market support band, which was in that vague price region, and also through things like this white line, which I'll explain in a second. And unfortunately, it's just broken to the downside. Now, this was outlined briefly as a scenario in my video yesterday because I did note that we needed to get above 64.5k, or of course we wouldn't be able to break up to the top of the channel, and 64.5k was actually a vague resistance zone and a vague support zone previously, as you can see on this wick right here, and previous wicks throughout the last range we saw in the month of May. We unfortunately failed, to my surprise, to get above 64.5k, and we just dropped downwards, straight downwards below the whole channel itself. So that's one of the, I guess, examples of unlikely scenarios playing out. Objectively bullish structure breaking to the downside while on objectively major macro support. Just an unlikely scenario playing out. What can you do? Another line broke to the downside as well, and that's the white line we saw on the screen. It's actually the line that I basically spoke about in yesterday's video just right off the bat. I actually named my video after this line. It's a white line stemming backwards from around May 2023, cutting through this price action here, coming all the way up. And as you can see, breaking straight to the downside here. Now, obviously, this line has been wicked above and below before. Perhaps this is a wick. It's not necessarily a confirmed break yet because this line is not a precise line. Maybe that's the case. We've got 17 hours to find out. But right now, it's broken. And given the fact we broke the channel as well, I mean, it's not looking good for getting back above it. So, I don't know, that's two separate things that have occurred there on the Bitcoin chart that does put Bitcoin back into the frying pan, really, because in yesterday's video, I was looking at the idea that, well, we're in a pretty bad position on the macro, we're testing the macro levels, but these bullish structures, such as this white line offering support and the channel, are giving us some hope for a bounce to the upside. That hope has gone now from that price region, unfortunately. We don't have any bullish structures forming at this point now anymore. We need to create fresh ones. Now, is the macro destroyed? Are we in a bear market? No, not yet. Because as we know, and as we've discussed many, many times, and we'll bring it up again today to show you, what needs to happen for Bitcoin to enter a bear market is we need to break below, definitively, the 61k level. Why is that the case? Well, let me just go ahead and clear up this chart. Let's remove the lines. I'm going to bring them back, by the way, tomorrow to see if there's any progression if we got back above them. But let's go ahead and for now, just remove some of the lines that aren't necessarily relevant anymore. We'll keep in this yellow line because that will still act as a breakout line for a validation back to the upside. But for the most part, we just need to look at these horizontal levels. Why is 61k important? Well, we know for a fact that 61k is a very important weekly close level. It's the lowest ever weekly candle close we saw within this price range. But it's also, and this is probably where more of its importance stems from, a monthly candle level. If we look at the highest ever monthly candle close in 2021, it was at around 61k, and some of these monthly closes again were in that vague 61k region as well. So 61k is a monthly chart level, and it's a monthly chart level that has remained valid enough throughout the time from the top in 2021 to basically form the structural bottom of this range. You know, all of the bottoms we've seen are around the 61k level. It's not an exact level. It's not a precise level. It's not like if we drop below it for 3 seconds, we're out of the market. No, it's like, well, this is a vague level that's generally holding on daily candle closes for the most part. But mostly it's a longer term level, weekly, monthly chart, which is why we were able to wick below it significantly to 57k. And we went to 57k, by the way, not because 57k is the bottom of the range. It's not. We went to 57k because all of our dynamic levels were at 57k at the time we went there. So for example, if we look at this chart right here, we've got a line in yellow, a massive ascending support line, which again was sitting at 57k at the time we went below the 61k support, as well as the bull market support band being in that price region as well. And right now, those two levels have moved upwards from 57k, and they are currently both sitting at 61. So we've got bull market support band at 61. We've got this ascending support level, 13-year long, at 61k as well. And we've got the monthly chart showing us 61k is the foundation of this range stemming back from 2021, it's very clear that Bitcoin's macro support zone for this range is basically 61K on a vague basis. So I don't think, and this is something that I've stood by for literally months, even since we first broke it and first retested it back in March, I was saying this. So this is not something I'm just whipping out of nowhere. This is an opinion I've had for the entire range, essentially. I've always said breaking 61K definitively will be the destruction of the macro structure for Bitcoin. And I stand by that. So right now we haven't actually destroyed the macro structure yet. Technically the macro structure is intact. It's at risk though, because that bottoming formation that we found yesterday and that channel formation broke, and now we're heading downwards. So it looks like, in my opinion, we will be retesting that vague 61K region, and that region has to hold, guys. It has to hold. And it's not necessarily reassuring that we're retesting it with a massive double top formation going into it. That's not a reassuring structure, but let's wait and see. I can't say that other charts are looking much better right now. I can't. Ethereum is not looking too bad. We've got an ascending support line in the RSI for Ethereum, showing us that this could be the bottom, as well as a horizontal support line for Ethereum stemming back at around that 3,300 or 3,400 region. Perhaps that's the bottom for Ethereum, but overall, you could just draw in a descending triangle formation. It's not really showing us anything that's suggesting any sort of directional move. It's just showing us there is support here, but that's not really telling us anything, because we know there's support here, because Bitcoin has support at 61K. That doesn't necessarily mean it's going to hold that support. It's just showing us it has support. If we don't have bullish structures surrounding the support, having support doesn't really mean anything in terms of predictive, I guess you could say, intel. So moving forward into total 3, and this is perhaps the chart that has been showing, I've been showing the most amount of concern for in the last week, I guess, or more than that, maybe 2 weeks. But now all the charts are kind of equally concerning. Because total 3, we know for a fact, is on major support and it needs to hold it. That's been the case for a while. But now, Bitcoin's edging towards that major support, and so is Ethereum. But just to look into total 3 here, just for argument's sake, we've got a structural trend on total 3, 5-step pattern. The 5th step being a bull market with an explosive altcoin season. The 4th step being a retest of the bull market support band, some sideways consolidation, a retest of a RSI ascending support line. And obviously we're on step 4 right now, but step 4 is dragged out for quite a long period of time, and we're threatening to break step 4. In fact, we've already broken aspects of step 4. For example, we've broken the bull market support band, not a good sign. We are, technically speaking, depending on which RSI line you look at, technically speaking, still above the RSI line. But for the most part, what I'm looking at here on the total 3, given the fact that Bitcoin and Ethereum are still above the critical levels that make up this part of a trend for total 3, I'm looking at this ascending support line in blue for the most part. And right now, this is still intact. But as you can see, if you zoom into the price action, we are literally on the edge, right? Where we actually wicked below it very briefly. I don't think that wick means anything, by the way. I think it's a more vague level than this chart shows. And obviously, I won't be necessarily getting too concerned unless Bitcoin breaks down as well. But this chart, this for the most part, this level needs to kind of hold. And we're literally on the brink of breaking it down. We need to be holding it. So what I'm looking at right now is the entire market under immense pressure. And I know you might get sick of me saying this by now, because I've been saying the same thing for like a week and a half. The market's under immense pressure, but I mean it. The market is under immense pressure. And, the total 3 has been under immense pressure for like a week and a half, because a week and a half ago, or, just over a week ago, is when we were testing that bull market support band. So it's not like I've just been saying, oh, guys, this is really important. You need to watch this every single day, and nothing's changed. Things have changed, and the charts remain important, because we are approaching macro structures here. And if we break those macro structures, we get thrown into a very weird situation. Okay? Think about this, guys. If Bitcoin breaks these macro trends, okay, these, not macro trends, if Bitcoin breaks these levels, bull market support band, the 13-year ascending support line, these are levels that have always held throughout regular conventional bull markets. They've always held. If we break them, under the regular 4-year cycle lens of the market, we will be entering a bear market. But the problem is, under the regular 4-year cycle lens of the market, we're not meant to be entering a bear market here at all. We're meant to be entering a bear market in October 2025, according to the 4-year cycle. Now, I'm not saying I believe that. I'm just saying that's what the 4-year cycle suggests. So we will be breaking the 4-year cycle for the most part if we drop below these levels here. Either that, or we will be breaking how bull markets generally work in regards to the macro structures they generally hold, such as bull market support band, for example. We won't know on any, we won't have any clarity whatsoever as to what would happen next if those breakdowns occur. That's the threat here. The threat here isn't that Bitcoin will die or crypto is going to die. I don't think that's going to happen at all. I'm saying the threat is if we break down below 61K definitively, we break down below bull market support band, all these things break, we have no macro guidance anymore. Like, we don't have these things that we can look at and be like, oh yeah, last time we were here, this happened, therefore it's likely this is going to happen again. We don't have that anymore. We're thrown in the dark, and we just have to trust raw TA at that point without any of the macro substance, which is hard to do, right? Because one of the reasons you're able, or I'm able on this YouTube channel for the last 3 years to have any degree of confidence in what's going to happen on a long-term basis is due to the macro trends that are right now being tested. So we really need them to hold if we're going to have clarity about the macro situation for Bitcoin and cryptocurrency as a whole. We need them to hold. I can't stress it enough. It's a very complicated topic, and I've spoken about it very extensively, and I might not have explained it very well before just then as I talk to you, but I just want you to very clearly understand the situation. If these trends break, if we lose bull market support band, we lose all these levels, that's not normal. Okay, and that doesn't necessarily mean we're entering this massive bear market down to 10K on Bitcoin. Not at all. It just means we're in the dark. And if we're in the dark, we can't be confident in any macro predictions anymore, which is very bad because predictability equals profitability. You can't have profitability without predictability. If you can't predict something, you can't really profit on it. So it's going to be more of a reactive cycle rather than a predictive cycle. I've been saying that over and over and over again. And I will say that every single prediction I've made so far, given the same data, I would make those predictions again. I think I've made the correct predictions. I think I've made the correct comments and statements throughout this entire price range. I don't regret anything I've said at all. The reality is we are testing levels that need to hold. And if we break them, that would be a first. And you can't really, as you know, the trend is your friend until it ends. Predicting firsts is not really a game you want to play. Everyone who's ever predicted a first historically for Bitcoin has been wrong every single time. So yeah, again, given the same data, I would say the same things over and over again. I'm not necessarily sitting here saying, oh, I wish I said something different. Not at all. I'm saying that these trends need to hold because if they don't, we're going to do something we've never done before, and that will be scary. So we'll speak about it more if it actually happens. I don't want to dwell too much on hypotheticals. Right now, it hasn't occurred yet, but I'm telling you right now, you should be watching the charts very closely. You should be biting your nails. These are very important times, and this is very concerning. Guys, thank you for watching. I hope you enjoyed. Check out the 3 exchanges. I think I mentioned at the start of the video, maybe not. The BitGet, BingX, or Bitunix exchanges. My referral links are down below. With those referral links, you can get a 15% trading fee discount for life on either of those exchanges. They're all very low in trading fees already, and you're getting them even cheaper. They've all never been hacked before as well. They're very safe exchanges historically, so check them out with my links below. Moving forward, VIP group on Telegram. We trade altcoins with altcoin trading signals posted directly to you 4 to 5 times a week. And we also have a group chat where we discuss the market 24/7. It's been incredibly useful, that group chat, during the recent week and a half when the market's been very intense, so check that out. And then finally, if you're interested, we've got a trading course teaching you how to trade. It's called the Become a Trader 10-unit course. And as per the title, if you do this course, you can become a trader. You'll learn everything you need to know about TA to trade the market on a professional kind of level. So check that out if you're interested, guys. Thanks for watching. Hope you enjoyed. I'll catch you tomorrow with an update. Fingers crossed.